Good morning, it's Harvey Jackson. Just going to get through some news articles of the day. Ocean freight is likely is going up, and likely changing trade routes is the other part of the story here. You can see in the Strait of Hormuz here, you've got a pinch point, and it's usually the travel back and forth on the Iranian side that is the biggest deal. And you got clusters of ships on both sides. I mentioned this story yesterday, and it's the African bunking hubs gain a ship reroute. So people just, or there's ships just avoiding going through the Strait of Hormuz anywhere close to the Gibraltar Strait, and going past Yemen and just going anywhere close to that area. So these bunkering hubs are gaining popularity, but with that you're gaining a cost of getting just marine traffic. So you basically doubled fuel costs. So it might not equal a doubling of freight to go across, but it's a big part of it, that's for sure. And you can just see here just the absolute sheer amount that goes around the Horn of Africa. It's not usually at this congested, but there's a lot of traffic, that is for certain. Uh, this is just talking about the fuel dropping below the $100 on the Brent. Oil falls as reported. 15-point proposal spurs ceasefire. So there's a he said she said scenario, and fake news is coming from now maybe from the Iranians as well, because you've got multiple countries that are all saying that they want to be a partner and have put some information into the Iranian space from U.S. So I think Turkey and others have been talking to some of the leaders there. Uh, President Trump engaged in productive talks. So as soon as he said that, that's been helping keep the price down. So as I said, Egypt, Turkey, and Pakistan are all in talks with the Iranians, and they are talking to someone. But obviously, the media from Iran is not suggesting that there's any talking. But they're also talking about charging let's call it a $2 million passing fee if you're not a part of the group here. Another story that just piqued my interest, but it just goes to show that there's still the push to not deforest, and of course this is older data, as 10 years ago versus now, and there's still beef is the biggest one that's deforesting at this moment. It's not the corn and soybeans where the focus has been in the past. Here's a brain dead guy right here, Hodson, and of course he doesn't list how much conflicts of interest he has. He just says that it's in a trust where just non-disclosure, and I believe that he's probably maybe more conflicted than maybe even than Carney on conflicts of interest. But let's just listen to his take and how this is actually going to get resolved with the memorandum of understanding.
At a critical moment, allies, of course, in desperate need of oil. Canada's ability to supply it is limited by pipeline infrastructure. Let's talk about ongoing talks with Alberta. How much closer is Canada to construction on a new pipeline to the Pacific?
So we have what's called a memorandum of understanding with Alberta about how we move forward on that. As you know, we built a new pipeline to the West Coast, the TMX, that came on stream in 2024. We're already talking about expanding that pipeline. We built a natural gas pipeline to the West Coast, the Coastal Gas Link, which is now firing the only LNG plant on the West Coast of North America, which is coming up to speed. That's really important for our allies. We have a series of discussions on about another 1 million barrel pipeline to the West Coast, and we're heads down working on that, and we're confident we're going to get there.
On that pipeline, though, you've said that the government does not want to fund the new West Coast oil pipeline. Are you getting interest from the private sector?
So that pipeline, the proponent of that's going to be the government of Alberta. The government of Alberta is working with multiple different pipeline private sector companies right now. They're the proponent. They've said they'll be ready to come to us in June of this year with that proposal. And when they do, we'll evaluate it. And we have a shared goal of trying to help our allies get more oil.
Your government supports a new oil pipeline to Canada's West Coast, but for that to happen, you've said that companies must build carbon capture in the oil sands. You've set that April 15th deadline. Do you think you'll meet it?
We are in intense discussions right now. I was talking with Premier Smith yesterday. I am confident we share a goal of building the biggest carbon capture project in the world. It's called the Pathways Project. We take 16 million tons of carbon a year out of the atmosphere, and it would significantly reduce the carbon intensity of all of our barrels. When we do that, we have the ability to add millions of barrels a day of production and build that pipeline to the West Coast.
Yeah, you need to be decarbonized because you're the only country doing it. Just absolutely ridiculous. So here's some of the countries that, well, just off topic here, Mario talked about this and he posted on X, but you can see the amount of money supply that's got pumped into the Canadian government. It's like 10,784% up since 1968. And you wonder why our value of money has gone down. And you can just read here all the things that are going wrong. You put more money into the economy from the government, it does not make it better. Just devalues your money. As a quick look at the weather here, it's starting to get a bit dry there this week. Now, soil moisture doesn't show that, but I'll maybe show that tomorrow. Soil moisture needs to probably get built in this area, but there's areas that need to get a little bit more moisture accumulation there. Snow rolling across the north here. Quick look at the markets here. So canola is down $7.30 on the front month, and on November it's down $7.60. So you're at $7.16 and $7.22 respectively. Soybean oil is down a half a penny at $65.20. Palm oil is down 47 ringgits at 44,985 ringgits. Crude oil is down $5.49 at 86.86. Brent is down below the $100, like it stated before, 98.18, and your diesel fuel is down 40 cents as well at 3.89 US gallon on the East Coast. Soybeans 11.58, up $3 and a quarter. Wheat is down $5.03, and your hard red winter is down 7 and a quarter, and your Chicago's down 8 and a quarter. Milling wheat down $2.75 in French Matif. Oats down a penny, corn down 3.20, and the Canadian dollar down a quarter cent as well. So I wanted to just show you this, basically setting the timeline for the war here. So, and I've had a few questions about, is the canola got a war premium? Yeah, it's got 6%. The diesel fuel has got like 50% increase in price, and your West Texas has got 34%. Sorry, I said it misquoted. The soybean oil has got 6% kind of war premium. And your canola's only got 3.61%. So here we are. So the war basically started right here somewhere. So you can see that you got this wedge, and it looks like we're going to try to break out of this wedge at some point here. But we are also kind of teetering on this support line. We're above the 20-day moving average. So it looks like we could be breaking lower here. Same thing with your November contract, but it's still above the 20-day moving average, but above that support line. Here's the European rapeseed, and the European rapeseed, now that we know that freight costs have gone up, $73 price differential between European canola and Canadian canola is probably not going to encourage a whole lot of sales when the Thunder Bay opens up for Manitoba and eastern Saskatchewan. Soybean oil, just right on the trend line, basically the same kind of a pendant flag kind of a scenario there. Soybeans have fallen and stayed below these values on this, I would say put a ceiling on, and it's trading below some of the short-term moving averages. Same thing with the crude palm oil. Light crude oil, here's your big candle a couple of days ago, and then it traded a little bit green there today or yesterday, but it's taking on the news every day and trying to evaluate it. Your Brent actually looks like it gapped, but I wouldn't doubt that gap could get filled sometime today just to clear the gap. Your diesel fuel futures, nice leg down. I had a couple ask you if we're going to get cheaper diesel fuel for spraying, and I go, oh, yeah, if the war kind of gets figured out, but I don't even know if we're ever going to get back into this area for any like it's going to be tough to get back there, especially with the constraints that Iran still has, and then it's filling all those supply chains to fill up those tanks again, and that's going to take a little bit of time as well. So the Canadian dollar slide down. We're now approaching the 200-day moving average, and we broke that pivot point last week, and still looks like we're sliding down here. And this doesn't happen very often, but we've got the same direction on the U.S. dollar. So, and gold approached that 200-day moving average, and it looks like we've got a little bit of an uptick as the U.S. dollar kind of loses favor. Gold does. Silver's trying to do exactly the same thing. Follow that. Here's your wheat basically trending in a sideways pattern here. You can see we've got a bit of a channel getting built between 625 and 646, somewhere in that area. Your new crop, same kind of area, but still looking to try to target a $7 futures first kind of contract out there. Kansas looks like it's trying to break below a trend line, and it's trading below the 20-day moving average. Same with The Chicago and your French wheat here is actually below the 200-day moving average. Corn still above the 20-day moving average. Still looks like it's got some sort of support there. Quick look at the beef, live cattle. Trying to stay above this 200-day moving average is pretty important. Trading right at the 20-day and the 10-day. Feeder cattle, same thing. And then lean hog futures broke through all the short-term moving averages and looks like it's going to try to approach the 200-day. And that's all I have for you.